Hi, Matthew and the Crux investors dialing in. My name is Michael Insulan, VP Commercial at Electra Battery Materials. Previously, until yesterday, we were called First Cobalt. We did a name change to Electra Battery Materials Corporation to really reflect the change in vision that we have for the brand. Previously, we essentially had an exploration site for cobalt and copper in Idaho, US, in the Idaho Copper Belt, name of which is Iron Creek, and a cobalt sulfate plant, which intends to process cobalt hydroxide to battery-grade cobalt sulfate to then sell to precursor makers in Ontario, Canada.
Michael, that's
yes.
good. Let's stop there. There's a lot of
there. Start over.
No, it's all good. Lovely to meet you. We normally speak with Trent, and obviously he gives us a certain perspective for the company. First Cobalt, as was, and of course now we're going to change Electra Battery Materials. Let's start with you though, before we kind of get into that. So you are VP of Commercial. What does that mean? What's your task?
So the reason why Trent hired me was really because I come from the cobalt background. I used to work for Eurasian Resources Group, which is the second biggest cobalt miner in the world, and of course a huge privately held mining conglomerate. But I came to Electra Battery Materials with a pretty long list of contacts from the industry and people and companies that buy cobalt. And my role is really to sell the 5,000 tons of cobalt contained in cobalt sulfate to markets in North America and Europe and elsewhere in coming years.
Okay, and how long have you been with the company?
I've been with Electra Battery Materials for the past 7 months.
7 months, okay. And new kid on the block. So we've spoken with Trent a few times over the year. We're over a year now. And, it seemed quite a basic model when we first started listening to it. It's basically go and buy cobalt, DRC, bring it to Canada, process it. That was it, right? That was the extent of the intent. With this name change, it suggests that you've got a slightly different model moving forward. And I think Trent gave us some clues last time we spoke about what you wanted to try to start doing. So can you just sort of lay out the plan of how you commercialize this business? Do you need to move further downstream? Do you reposition the company in any way, shape, or form? How are you going to tackle the market?
Matt, it's a good question. The idea, the principal idea that they had, my colleagues, when they started First Cobalt, was really to bring, as you said, hydroxide from the DRC, process it to battery-grade cobalt sulfate in Canada and sell it to third parties in North America and Europe. That is in itself a very good business idea. There is a good margin.
But it's small. But it's small, right? That was the problem. And the margins are okay, but they're not great. So what's changed?
The margins are very decent, because you have to think about this from the sort of global perspective. The alternatives that the battery industry has in North America and Europe in terms of salts is really either to go to Finland, but there's a very limited capacity, or they have to go to China. And what the whole battery industry is trying to do is really to alleviate this pressure of having to go through China at some stage of the battery supply chain. And what we're offering essentially is, in the first stage, just doing sulfate, of course. There are PCAM plants in North America. They are not particularly big at present, but they will grow. And in Europe as well, of course. So there is a ready market for our sulfates in the Atlantic region, as it were. But with this rebrand, you're right. We're sort of tackling the bigger battery materials challenge here, which is not only about cobalt. It's also about nickel, and it's also about precursors, because a lot of the battery supply chains that are being set up in Europe and North America right now, they still rely on some portion of the supply chain running through China.
Right. Okay. We're gonna get a little bit technical here. We better start doing some definitions for people, okay? So with a battery precursor is what's it used for, and who is going to be buying from you?
So the battery supply chain, it's 5 or 6 different steps, right? You have to extract the material. You do some primary refining into salts or sulfates. It's for an NCM battery, which is the most popular battery. You get the nickel sulfate, the cobalt sulfate, the manganese sulfate. At the PCAM stage, you essentially mix all of these together and get a nice powder, which is precursor material for cathode active material. Then that is transferred to a cathode active materials plant where you add the lithium. And then that CAM goes to the cell plant to then be rolled up with the anode and then with the electrolyte. And then you have a cell.
Right, and then let's talk about where you, because there's, you know, people assume that miners talk directly to automotive manufacturers, right? There's a few people that sit in between capturing value all the way along that food chain. So again, with where you were to what you're going to be, what's that? How far down that chain do you move?
Well, I think we're actually positioning ourselves in a very unique place in the Western Hemisphere, which is covering extraction, primary refining, down to precursor. And we're including recycling, right? And I believe we're the only company in North America that actually covers all of these 4 steps. And what you have, the build out of the battery supply chain, Matt, in North America has so far been about electric vehicle assembly plants, fine, cell plants, fine, and some of these cell plants will have cathode materials plants, fine. But no one has done the extraction through to precursor materials. And that's what we're positioning ourselves to do.
Right, and what's that going to mean commercially, to use your job title, for the business in terms of its ability to capture what incremental margin or incremental dollars, however you want to look at it? If you looked at that, what's the change in the business for you?
Well, there's a margin to be had, of course, in each step of this process. The precursor margins have historically been quite good if you look at the Chinese market in particular, because that's where some magic happens. And we're really looking for a joint venture partner, and we've started talking to potential joint venture partners about setting up the precursor plant, because that is really where a lot of margin is to be had. But that's not to say that the other steps are unprofitable by any means. Recycling is tremendously profitable, but at the current stage, it's not a huge market. There is black mass out there. It's going to grow, and it's going to grow as a business for us. But right now, the volumes are relatively small. And then, of course, refining, there's a very good margin there as well. It isn't a super slim margin, and we expect to grow the primary refining as we grow the Battery Materials Park in Ontario, so that we can still service our cobalt sulfate clients in Europe and in Asia and North America.
So where are you today? Because look, coming out with marketing announcements and marketing initiatives is one thing, right? They're lovely headlines, and they also show intent, right? They say, this is where we want to be. And you've kind of done that. You're talking about, a battery precursor, but you're going to need to find a partner. And you talk about nickel sulfate, you're going to need to find supply there. And you're talking about battery parks. It's not built yet. So there's, and when it is built, we need to understand what does that look like? Do you own 100% of it? Or are you partnering with people to actually build a physical, industrial, or chemical park? I mean, what's the vision?
So the vision is to, as you said, to build the Battery Materials Park down to precursor material in Canada. Now, how does that look on site, and who owns it? Very good question, right? The truth is that we are very likely to go at it on our own in terms of course, the cobalt sulfate and the recycling, which we're already doing, as well as the nickel sulfate, because those are very similar technologies. We have a great team on site, both building and capable of operating these assets. When it comes to the precursor plants, we will very likely look for a joint venture partner, whether that's 50-50 or 60-40, or we don't know. But it is a matter of IP, which we would, I think, be better off in terms of to bring this online as quickly as possible. We would be better off doing a joint venture with someone who's already doing it. That's
Okay.
the way to do it quickly.
But yeah, and I think that sounds smart in terms of because I think there's the kind of first to market type syndrome here around battery metals, and especially when you're saying there's not a lot of competition at the moment. The fact that if you get into production sooner, it stops other people from coming in. It's a barrier to entry because they'll look at the margins to be made and think, well, I'm not sure I want to put the capex out to compete against something that's already there. And he has got all the contracts in front of us. So no, I understand that. So talk to me about the battery park then in terms of the moving parts. So if you bring a partner in for the kind of precursor component with their IP and you use both balance sheets to fund this thing, that makes a lot of sense. With the nickel sulfate, I mentioned, you're going to have to go and find and source nickel or whatever form that you get it in to be able to then process it and capture more margin down the line, aren't you? So how's that going to work?
We're looking at a variety of options on the nickel side. As you know, Canada is an extraordinarily resource-rich nation, and I think one of the things that Canada might improve, though, is to add value in the country, not export, semi-processed materials. And this is really an opportunity for a lot of existing and future projects in Canada to send their intermediate materials to a battery materials park in the country to add value in Canada. There's a lot of promising partners on the raw material feed supply side, not only from the mining side, but as you alluded to before, you do have OEMs that have gone out there and secured raw materials. And we may have been approached to process some of this raw material as well. The concept of the battery materials park is not something that we're just dreaming up as this is a great story. This really comes from commercial negotiations that we have had over the past year and a bit, maybe 2 years. And the idea here is that the market in North America is asking us to do this. And finally, we've done the analysis, and it is a very, very good concept, and we're going to go full steam ahead with it.
What I'm getting at is, where do you make the margin? What does that look like compared to your, whatever it is, 230 million market cap today, right? I'm trying to get a sense of, is there a growth story here, or is it a very slow and steady thing because you have to go and secure small contracts, prove yourselves, build it up, and over the next 5 years you may get there? Or are you just a landlord to a bunch of partners in a business park? What's the business model? What's the plan of how the money is made? Because if I can see that, I could get excited. So I don't know how much you can just share with us.
Yeah, no, it's a good question. I mean, we could be a landlord. We've added a lot of land around the existing site over the past 6 months, right? So, could we lease it out to a bunch of different businesses, making their own margins? Yeah, it's a possibility, but that's not the plan, Matt. The plan here really is to finalize the construction of the cobalt sulfate plant and the recycling line, which is essentially already in place in many ways. The next step is to build the nickel sulfate plant. We will start construction on this as soon as we are ready, and we already have the construction crew. We have all of the relationships, so we will capture the recycling margin. We'll capture in-house the cobalt sulfate margin and nickel sulfate margin. Now, when it comes to the precursor material, that's where we think we would like to share it, because we would like to bring in another partner, and we're talking to potential partners that have the intellectual property to produce precursor material, and they are copious amounts of companies looking for sites in North America. And you talked about barriers to entry before. It's not a really matter of us being first movers. Yes, we are very early movers. That is true. But this is such a fast growing industry. There will be a lot of space to grow here. The biggest barrier to entry is really the process engineering know-how, which we do have in-house with our technical team. That's great. And the construction know-how, of course, which we are also have in-house. But really, it's about also about permitting, of course, of the site. You can't build these things anywhere. You do need a lot of environmental planning, and we have carried out that work. So that's the biggest barrier probably surpassed already.
So how do you compete then with people with big balance sheets, right? So let's say the OEMs kind of start getting that together and they're securing options on various or around the world on various materials, copper, nickel, graphite, zinc, whatever. They have got the ability to fund the build of competing battery parks. Really, right? And they could be strategically located for them. So there's lots of ways that people can come into this space. So that's why I'm interested in barriers to entry. The know-how of building. I think there's going to be a lot of people out there who could build. The technical know-how out ex-China are there very few teams that could actually genuinely deliver this technically, or again, is that something that if people start looking at it and can think that there's enough money to be made, they'll start moving in and the competition for you will increase? I mean, how are you looking at the market? You're the commercial guy, so you must have a sense of how much time you've got to kind of get this done and get it right.
The technical know-how to do this, and I speak from absolutely no capacity of knowledge here because I'm not a technical guy, but I do speak to our experts. There's no problem, drawing out a flow sheet here to make all of these materials. The issue really is permitting, construction, and process engineering. And this is a pretty massive learning curve. In addition, of course, to the permitting. So I don't see battery materials parks popping up left, right, and center. It's also really a matter of who from the OEMs is willing to do this right now, because the partnering up in the battery supply chain, it's complicated. It's essentially like a bunch of teenagers dating and trying to create relationships, and some will fall apart, some will flourish into marriages and all of this stuff. But it's a learning process for the whole industry. I really do believe that with the interest that we've had from the OEMs, the auto industry, the cell industry, they're looking at us and we do have significant support. Nothing that we can reveal right now, but in the future we will reveal the likes of that support.
Okay, well, that's important, okay, because OEMs talk to everyone all the time. They want to know what's going on all the time. They want to know what their options are. They've got to secure 5 years, 10 years, 15 years worth of supply for their supply chain, because, designing stuff in and out of batteries or cars generally, it takes a long time, right? So the solidity of any agreement or understanding with them, the more certainty there is around that, the easier it is for you to get cheaper money. The easier it is for the market to actually understand the realities of what you've got. But, MOUs and letters of understanding or intent don't really mean too much at the moment. So which seems to be where a lot of people are at the moment. So you think that you are looking to close down some of those discussions into something that could be quantified financially. Is that's your part of your remit, I guess, right?
Of course. I hear this a lot, that MOUs don't really matter. They don't mean a lot. I'm not, I think, of the same view, to be honest, Matt. An MOU or a letter of intent indicates that discussions and negotiations should proceed on a timeline that has been determined in the MOU. And so once both parties do sign an MOU, we're really looking to complete business, right? So I think over the next few months, say half a year, there will be a few interesting MOUs coming out from our side. Now, most of those will relate to commercial cobalt sulfate, because until the nickel plant and the precursor plants are up and running by the middle of this decade, 2025, 2026, we really have to sell the cobalt sulfate, of course. And we intend to lock in long-term deals here, which means that we will have to expand the cobalt sulfate beyond what we are producing in the first stage, of course, to cater for these long-term contracts going forward as well.
Right. And can you give, or have you given, or can you give forward guidance in terms of revenue for 2022, 23, 24, 5, etc., right up until the point where you some of these bigger ideas start actually manifesting themselves dollar-wise?
We have worked out an internal financial model for all of the 4 phases, which is essentially cobalt sulfate, recycling, nickel sulfate, and precursor. But we're not ready to release that quite yet, Matt. We will continue working on it. And of course, we're in the commodity industry. Commodity prices are volatile. Everything changes very rapidly. So we would like to keep on analyzing that. What I would say is that it looks like a very profitable business. What we expect to be is the premium battery materials supplier. We will be the greenest battery materials supplier in the world. And if you look at the general trend in the industry is that green material will command a premium going forward. So beyond the sustaining margins that you expect any plant to have, we would expect to be above that simply because of a green premium. And these are both just the idea of a green premium, that companies will pay more money essentially to have a greener material. But there is also, of course, mechanisms in place that will be in place over the next few years. Things like the carbon border adjustment mechanism in Europe, and you probably see that popping up in North America as well, where you essentially have governments penalizing material which is not clean. So we have another bit of margin there to capture as well.
Where do companies like you start measuring that? Because we've seen reports today of governments reporting their CO2 emissions, and they're being picked up and going, well, actually, we're not sure we believe your numbers here. So that's on a government level, because they've got different countries measure things in different ways. Will you start, when you talk about we're going to be the greenest, do you start measuring that from when the product hits your front door, or do you track it all the way back down to where it's been mined in the DRC and count that in terms of the number that you present?
The analysis that we've done, so we did a third-party analysis a little while back, and that was only on a plant level, where we essentially have half of the carbon emissions of our biggest competitor, which is, of course, Huayu in China. Mainly due to, of course, hydroelectric grid in Ontario, whereas Chinese are based on coal. But even if you go back, if you just look at the high-level numbers, if we run the battery supply chain to North America, we're essentially half of the transport distance, so freight, sea freight emissions, half of the distance compared to the Chinese routes to North America. And if we were to ship our material into Europe, we're about 30%, well, it's 1/3 lower emissions compared to the Chinese routes. And then, of course, when it comes to adjustment mechanisms, whether in the sense of tariffs or other mechanisms like carbon pricing, because of these 2 items, we expect to be much lower than the Chinese. The other issue, of course, here is we do have a very good rail network running from the Port of Montreal, where we have inbound and outbound cargoes up to very near our refinery, and we will be looking to draw, work with the government and work with the rail company to construct an additional line to the refinery site, just a couple of kilometers, really, just so that we really try to not run any trucks here in this operation.
Yeah. Okay. So I guess at some point it'd be important for you to be able to have an independent come in and put all these numbers together for you. But I appreciate the kind of general numbers there. Share price has done well in the last 12 months. And so again, in the last 12 months, you've gone from sort of 12, 13 cents up to 42 cents. So that's great news. Market cap is what you've been able to raise a lot of money, raise whatever, 37, 38 million bucks back in was it July sort of time? Another, you got a convert of 7.5 you've done recently. So I think the market's liking what you got to say. But a 230 million market cap without being able to actually give guidance on revenue, and you can't yet talk about contracts in place. It's going to get harder and harder for people to value you as a company. So are you kind of conscious of that?
Well, now you made me very conscious of it. Of course, we do have numbers, Matt, and we have gone out with numbers in our investor presentation, and anyone can see it on our website. Right? We are talking internally about doing not remodeling, but essentially relaunching the company and provide new forecast numbers in coming months that does incorporate the expansion here from not only phase 1, which is cobalt sulfate, but also 2, 3, and 4, which is recycling nickel sulfate and precursor. So you look out for that, but I'm not willing to give you any numbers right here, right now. But it's forthcoming.
Okay, it's forthcoming. Well, look, and I appreciate you don't deal with the finance side of the business. I'm not going to grill you on any of that, or with the construction of the convert, etc. But you are, as a commercial guy, you're the beneficiary of that. So how are you going to use this money? You obviously got a lot of money in cash at the moment, so you've got all the money you need, I guess.
Well, the money that has been raised, really, it is for the first phase and second phase construction items, right? We really just need to execute here. This is a matter of executing in the next 12 to 14 months and have the cobalt sulfate plant up and running towards the end of 2022. And we stick by that. And shortly after, we will have the recycling line up and running.
Oh, see, that's the really interesting bit here, because I think a lot of people are starting to catch on to the fact that recycling is going to be such an important component to the story in terms of the full cycle. We've seen recoveries on nickels only is 70%. It's one of the higher recovery materials out there. For cobalt, and is that the two you're going to focus on in terms of the recovery?
We're gonna, from black mass and other battery supply chain outputs, we will be most likely producing the following products. So it will be a nickel and cobalt, it will be a lithium product, and it will be copper product.
Okay, got it. Okay, well, that'll be interesting when you start giving us a bit of an idea of what the recycling business is going to look like, and when you're going to get at that. But look, Michael, love to meet you. Good chat today. It's always interesting to speak to the commercial guys, because they're the ones that've got to put this thing together and keep the money flowing and put the contracts in place. So it was a nice insight for people to understand how the company's going about it. So appreciate your time today. Hopefully we'll see you or Trent in the near future.
Thank you very much, Matt. Happy to be here.